Spoiler alert, somebody on this show is actually going to say that the Federal Reserve is not finished hiking rates. Yet the chairman came out today and actually gave his, I would say, his least hawkish tone of the tightening cycle, really signaling that the Fed might be done. Welcome, everyone, to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in sunny and hot Scottsdale, Arizona. He still has a sweater vest on, but I'm guessing that's
freezing out here. God, it's under 80 degrees. Please.
Wow, I tell you, New York is getting very cold these days, but we have a very special guest with us today. Barbara Doran, she is the CEO and CIO of BD8 Capital Partners, and she's going to join us today to help us get through all of this mess that's taking place on Wall Street. Barbara, welcome to the program.
Todd, thank you. Delighted to be here.
Well, we're glad you're here as well. And I want to ask you, because maybe you could give the audience just a little bit of an introduction about BD8 Capital Partners.
Yeah, Todd, thanks. Yeah, BD8 Capital Partners is a wealth advisory firm, and we work with a lot of individuals, families, some foundations in planning their needs, but our real strength is in investment management. It's really about trying for the best performance possible, just not, trying to not lose money. We want to not lose money and make you money. We also do separate managed accounts in the large cap growth session as well. So it's also an asset management firm.
Well, you're very successful with it, obviously, because you're on all the news channels. I know that you're coming to us right after an appearance on CNBC, and I think that's fantastic. But they obviously are going to the All-Stars because of the big news of the day, which is the Federal Reserve. This is our third straight day of market gains that we've seen, which is a complete reversal of the 3-month losses that we had in a row. But it's on the heels of the Federal Reserve saying, look, nothing's happening right now. Yeah, Powell gives a few clues here and there, but what do you think? What's your take on today's news?
Yeah, it was interesting because there's a lot of news today. First, there's been a real concern about funding of the federal debt. And you've never seen this kind of concern, but it is so expensive and so much. And so it's been really weighing on the market. And you've seen long rates back up. And that's really been effectively interest rate hikes for the Fed. And it was funny because Powell today, when asked about that, refused to quantify. And there's some strategists saying, hey, with the backup in long rates, it's been the equivalent of 3, maybe 4 25 basis point rate hikes. So that is, yet to come and be felt in the economy. So today, Chairman Powell was, and as you said, was probably the least hawkish. I think Tobin and I were talking earlier that I think I've heard him. And in fact, some would say it was a victory lap where he said, last year we were concerned that we weren't going to act quickly enough, get rates high enough to really stem inflation because you don't want to get embedded, yet we did not want to kill the economy. And right now he basically said, I think right now the balance is good. So they're feeling pretty good about where things are. And of course, he's still saying, yeah, we're not ruling out a future rate hike, but it seems to me very unlikely at this point. You've got, even though the economy is strong, and Powell said that and he also said wages are moderating, job growth is moderating. You saw the ISM number, manufacturing number today, surprised everybody. Yeah, it was negative. People thought it would go the other way, but so you still got a contraction there. And I think there's been a lot of the news recently about credit card balances are climbing up, delinquencies are climbing up. You're seeing in auto loans. Now, none of them are at dangerous levels, but the trend is going up. So the consumer, though still, I think, flush with cash and, of course, jobs and wages, and that is most of the ball game, are starting to feel a little bit stressed. So savings are coming down.
Todd, I sort of, I was like, he's having like an after party cigarette out there.
Shouldn't accomplish.
I guarantee a couple of things, Barb. I guarantee you, number one, that he knew what that Atlanta GDP number was going to be that came out. Remember, there was 5.1% growth GDP in the second quarter, and then the third quarter, shockingly, is 1.7%. So they knew that was coming. So he had that in his back pocket. He had certainly the fact that earnings are not robust, but they're not going south. And then not only was the bond market doing the work for the Fed, but the stock market up until July, August was also doing the wealth effect. And as I constantly point out on this podcast, it's the top 25 percentile of households in the United States that are responsible for the vast majority of discretionary spending, the vast the travel, so on and so forth. So it all makes sense. Where the trap door, I think, has been is when the inflation card was not coming down. And remember that shelter in all of its magnitudes is 42% of the frickin' CPE, right? And we knew last October and November was the peak of when we had 8-9% year over year inflation from the year before, because people need some place to live and nobody was selling anything, and all the stuff we all know now. So we're getting the reduction that just the math says. And we got the 3 best days in the market for a while because the narrative, Todd, and that's the driving force I think most individual investors don't understand. When you get all this stuff thrown at you all day long, as I do and Barb does, et cetera, you got to come up with a narrative that fits all those pieces together that you can invest in. And again, I'll give you a perfect example. We were very, very strong on the micro sectors of the economy. So liquefied petroleum gas, Barb, it's my favorite sector. 6 months, 12 months, 18 months, 24 months, we're up 400% on LPG tankers, for crying out loud. But guess what? Now we have the Panama Canal blocked because the water's so low. They have to go another 2,000 nautical miles to deliver. And one of our LPG, I've talked about on the show a lot, just came out today, raised their dividend, stocks up 75%. There's just this year. There are pieces of the world that have inflections of growth that have nothing to do with Jerome Powell, and that's what we've focused on. And we're stock pickers, and Barb's stock pickers.
Well, hey, real quick, Toby, do you think the Fed is finished tightening?
The Fed is absolutely finished tightening, and the reason is that the only thing that counts to them is not the CPI but the CPE, the core equity, inflation number. And it has peaked, and the stock market did the work, and now the stock market is building a bottom. The interest rates that they are charging have nothing to do with the interest rates that are outside the world in the real bond market. And so when we didn't keep above 5%, when the bond vigilantes, as our dear friend says, didn't stop buying bonds, that told me the narrative is enough is enough. The Fed is done, and the Fed basically is doing the victory lap, as Barb said. They said, hey, we're going to get a soft landing, whatever the hell that means, Barb. I mean, I've heard that 5,000 times.
I know. Well, today, it was funny because Jerome was asked, do you see a recession? You've talked about it before. And he didn't want to answer it, which was interesting. I think because he's really trying to keep his options open, even though he's like a cat licking its whiskers,
Yeah, right.
Okay, we're in good shape. And basically he had to say, no, we don't see a recession. And I mean, I've heard, pundits on the news talking about, we're going to be in recession by year end, which is only 2 months away. And it's just not possible. You don't have a recession with this kind of job growth and this kind of wages. So I think, the economy is in great shape. And basically but it is softening in ways that we need to, and inflation, as you said, Tobin, that PCE number is key. And, it's sort of stalled out a little bit. But if you look at the trend, it's coming down. So,
I will say that there's some very notable people who I won't note that have been so dead wrong about a recession. It changes every quarter. No, it's the recession is the second quarter. No, it's the third. Did I say third quarter? And as Todd wants to shake his head and kill himself when I'm about to say this, if you actually do the mathematics on what goes into an economy with a 76% service industry and 25% of the households providing almost 80% of discretionary funding, and 96 million people who have some form of monthly income coming in from Social Security or pension, so on and so forth, plus. And we had another note last week, which I love from Ms. Iska, was that, and in the 30-somethings and the 25-somethings, they all have side gigs. They all are doing side gigs for income. And I just saw a report that almost 20% of the income on a household from 25 to 35-year-olds is from some side gig. All that stuff never was around the 800 years ago that these people are calling for the recession are using data from. And, we have different business models. We have
Yeah.
business models, the subscription based.
Yeah, we know what I think has confounded people is that, everybody on the street is always, well, you can't say it's different this time because it always works out the same way. Well,
Bullshit, you can.
it is, and it has
It
been
is.
different. We never had a shutdown where you suddenly just stopped everything dead. And I think, initially, as you remember, the Fed was talking about inflation was just temporarily high.
Transitory.
Yeah, transitory was the word, exactly. And it's really because they expected the supply demand to get back in balance much more quickly. And it's obviously not been. But, that was another thing Powell said today that was very interesting. He talked about, we don't think wages are necessarily the main cause of inflation. And he was really talking about the supply issues and demand that are they're still being straightened out from the pandemic. So I thought that was,
it's just very convenient right now for him to just say, okay, we're fine, but we'll leave it out there in case we have to. I mean, you have 3 straight months of equity markets where you have 401ks that are down with 10%. The S&P 500 is down from its peak 10% going into this week. And you have also this job market. There's so many other variables right now. I am of the belief that they are not finished tightening. And here's why. It's a long road to go from 3.5% to 2%. And he has said, we're going to hit that 2% mark. It might be a higher for longer, but then that's going to push us well into 2025 because I just don't see the economics, the metrics that are going to prove to us that all of next year, we're going to continue to see the softening. You have job growth, which has just been phenomenal. And then you also have the retail sales number. People are still spending money because they have these jobs. So, I mean, what do you guys think?
Todd,
Todd,
you didn't live in Washington, D.C. for 25 years. I don't know if you know this, but there's a presidential election this year.
I think I read that in the New Yorker.
Jay Powell, or we just call him Jay, knows better than anyone because there's never been a better brown noser than Jay Powell. That the Fed does not fuck with the presidential cycle. That is a sacrosanct rule in Washington. And so they are done, and they're not going to rise in that because A, he likes his job. B, he doesn't want to go down as a guy who got fired because he messed up the economy. And then the third part of it is that GDP, when you go into earnings and you're getting the take-home pay, people are so crazy about this high, default rate on auto loans. Well, holy mackerel! These were people who make $50,000 a year going out to their Ford dealer to get a brand new $85,000 Ford 150. You can't hire enough repo men today in the United States, but you can't extrapolate that little tiny data point over the entire freaking economy. Okay. All right, and then the final point is, I say it again all the time, but the top 80 counties in the United States account now for 81% of GDP. The other counties really don't count. If you keep, as we do, the GDP of the top 80 counties, you will see that they're much stronger than the overall counties, but they count on an 8-to-1 basis. So who cares about the other counties?
Well, Todd, what were you going to say there?
I was going to go right to you, but you go ahead.
No. I was going to say about consumer spending. I mean, because, Tobin made the point, 3/4 or 2/3, whatever it is of the economy is services. Consumer is king, right? But consumer spending, when you look at it, even though, I look at I don't know if you look at Bank of America Institute, they have like 68 million accounts, small business, and they do great work. And you're looking at, they still see excess savings, that are higher than pre-pandemic, right? They're coming down, but they're still there. And you look at the savings rate, which is coming down. That number was out today, right? And you see consumer spending. We've obviously seen a pullback in durables. You're getting much more information about the lower income consumer is getting more stressed. And we know the lower income consumer spends most of their money on rent and food and transportation. So the consumer is pulling their horns in a little at a time. In fact, we will know soon, at the end of this month, we've got the big Prime Day or Thanksgiving shopping. So we'll have a little bit more, understanding, but I think the consumer is definitely slowing down, but it's not dropping off a cliff.
Barb, the consumer is not an amalgam of all the consumers.
No, you're right. What you're
the
making
top 25%, 81% of discretionary spending. I follow them. I don't follow the bottom three quintiles, right? Simply because from a mathematical standpoint, they really don't count at the margin, as we learned, back in, economics 101, at the margin, it's the discretionary spend. The other side of it is actual wages. Remember, Wall Street, was like, oh my God, all these tech guys hired all these, 350,000 people during the pandemic, et cetera. And you know what their average salary was? It's $256,000 a year plus. When you added those people in, what I was most worried about is not that they fired 100,000 of them, that was going to take over the overall, earnings, but the top 25% income earners, wage earners, commission people, et cetera, they are the heart and soul of the discretionary spending. And I don't care whether F-150s are being repoed because the guy can't afford. Do you remember to see the number recently where the average monthly payment was almost $1,400 for a freaking car or truck in a household that is making $50,000, before tax?
Yeah.
And
when you
that's
see
what
the
got
credit
effed
card
up.
balances, I think it's some incredible number, like over 40% of people don't pay them off each month. That's 20, and they're now at 20%
21%.
interest.
So
and that catches
they're
up with
locked
you.
out. They're locked
Yeah,
out of spending,
that catches
but
up
their
with you.
spending doesn't count on a matrix basis of the whole thing.
Yeah. Now,
And I
Todd,
know
this
I get these
Yeah.
emails that I'm prejudiced against low income people or whatever. No, I'm not. I just do the math to have to make a judgment for my wealth management clients as to what's really going on, and don't fall for this claptrap on either both sides of the aisle about how world's going to have.
No, it's true.
problems,
I think there's an impact on the margin. I mean, I
on the
agree.
margin, but not at the margin.
Yeah. And people, as
All
you
right.
said, mentioned the wealth effect. So anyway, and one thing that wasn't asked a pal today, or maybe I missed it, but was really, everybody's talking a lot about the funding costs, with our deficit, how much that's going to cost us in interest payments. And that's clearly the higher the rates are. So that's not PAL's mission. It's supposed to be about jobs and inflation, but that has to be somewhere in their conversations. And I think that ties into, Tobin, your point about it being a presidential election year. I mean, the deficit and all that's got to somehow, you got to get those payments down.
That's true. I'll just add two quick things in.
Yeah.
48% of homes in the United States are owned for cash, so they don't pay a mortgage. The other 36% of the next houses are at rates below 4%. I mean, mortgage rates are high, but again, it only applies to a strata up here, and you can't qualify for a freaking mortgage, if you have a $50,000 or $60,000, income. So we're insulated in many ways that I don't think the market is really thought.
No, you're right. And Tobin, another thing that people don't talk about is because of those low mortgage rates and the fact that, on that cash, I didn't know it was so high that people pay cash, but that frees up more disposable income, obviously. And so, and that's really a powerful thing. You've just got more money to spend on a monthly basis.
I just look at my B of A statement, for the joint account my wife and I have, and I look at the stuff that we spend money on. Wine is a health food, okay?
Resveratrol, right?
Traveling to Malibu last week, that was a mental health day. But I don't know. I live in this little cocoon of Scottsdale. I don't know where you live, but when you go through the upper 25% income households in America, things are really good. And their market's down a little bit, but oh my gosh, 5% for no risk money. We just bought a bunch of we think very high rated high yield bonds for 12.5% yield. And when rates finally come down, Todd, we haven't mentioned the fact that we've had 2 years of bear market for the bond market. I mean, if you're a pension plan, you're pulling
last year was a disaster. Everything was correlated last year, stocks and bonds. It was not a place to hide. And bond funds this year have lost money as well.
Absolutely.
So it's, bonds, people think, oh, it can be a substitute. I mean, I don't know what you think, but to me, bonds are complementary. They, they're an adjunct to stocks. You're still trying to build long-term wealth, it's stocks. And
we got to go, Todd. When we come back, though, I won't come back.
Tease it out, Toby.
I want to hear Barb talk about another, I believe, issue that's important to investors right now is that we've had 40 years of declining interest rates, 40 years of up and then down declining inflation. That era is, in my mind, over. And if you're investing the way that you did during the Tina era and the no cost of money and then the zero cost of money, then the negative cost of money, if you're investing that same way, then you're a bonehead, because there are huge dividends. Now, remember, dividends always made up 30% of the return of the S&P 500. Now it's, like a
beautiful
line.
Toby, I tell you, you're going to have the audience on the edge of their seats, because coming up after the break, we're going to ask Barbara the same question. We'll probably just summarize it a little bit and get a little bit shorter. But we'll be right back. But with us today, Barbara Doran. She is the CEO and CIO of BD8 Capital Partners.
And lead guitarist for Duran Duran, by the way. She doesn't talk about that.
And I sing too.
Absolutely. All right, well, listen, coming up after the break, we'll be right. We're getting to get all of this. So we'll be right back.
Buy, hold, sell, brought to you by Crosscheck Management.
We give game day a whole new meaning. Like the Kentucky Derby, Woodford Reserve Bourbon is a spectacle for the senses.
What does it mean to be a leader?
It's taking my first solo flight.
At the University of North Dakota, we lead our own way.
Welcome back to Buy, Hold, Sell. Well, today is Fed Day, Fed Decision Day, but there was no decision out there. But stocks still rallied, and this is our third straight day seeing the markets rallying, and everything's up across the board, all major indices, and we are obviously in the middle of tech season as well. With us today is Barbara Doran. She is the CEO and CIO of BD8 Capital Partners. You can go to our website at bd8cap.com. We encourage the audience to go there. And when we left off in the last break, Barbara, we were talking about all the different variables that are out there, some other opportunities for investors. What are some of the because Toby brought up he teased the going into this block, but what do you think? I mean, going into for the rest of the year, I mean, what should investors? Because investors clearly want to know, what should we be doing going into 2024?
Sectors, stocks versus bonds. What's the strategy here, Barb?
Yeah, well, I also think you have to look at where we are in the market. And Todd, as you pointed out earlier, it's been 3 months of a correction. Official correction is 10%. We're there. And the question is, do we go lower? I think after the Fed today and sort of this benign, non-threatening Powell, I think we're probably fine. And we're setting up, November and December are seasonally strong, in the stock market. October is not, and boy, did it live up to its historical reputation. And so if you look now where a lot of stocks, and it depends on the sector, but a lot of stocks are off their highs. You've got the tech sector, for instance, which I'll talk about in a second, because that's an area that I really like. But if you look, sentiment's been very negative. Technically, the market looks very oversold. So I think you've got a lot of bad news baked into the market at this point. And I think the risk reward in terms of downside is probably limited. So it's probably a very good time to start picking some stocks or adding to your portfolio.
No, Barb, I go back to like the early 80s. And I'm taking the Wall Street Journal.
The 1880s.
Every day. No, I'm not in my 80s yet. I have kept the 52-week new highs and new lows. I've kept them in a drawer. I actually, my wife made me clean up the ones from like the 80s and 90s, but whenever I have this on a spreadsheet. Whenever we get to the point, as we were last week, where we had 110 new lows for every one new high, it has been a bottom in 88, in 92, in 2002. In 2009, 2010, it's just, there are some mentality here. Everyone who had to sell has sold. Everyone who's, crapped the bed has sold. And then you get into, when I ran mutual funds, October 31 is a year end. And so you want to, you want to sell the crappy stuff, take those tax losses, take some profits, so you watch them so your mutual fund shareholders don't get capital gains. All that happens in the washing machine, boom. And now we get to November 1st, and the Fed calls off the dogs. The CPI and CPE is on the right slope. Jay Powell is never going to say, oh, you know what? Because we have so much higher costs in the world today because of deindustrializations and de-China and de-globalization and reshoring and all this stuff, we're going to take the price inflation rate to 2.5%, because that would be what would be a normal rate given what we've. No, he'll never do that. But we keep going down in rate. If we keep going that rate, and tech stocks, you remember we had 7 tech stocks that were almost all the alpha, the outperformance. Without them, we have 0 market gain the entire year. So now it's time to be a stock picker, and I want to hear what Barb's picking.
Yeah, no, well, Tobin, you're right about it. I wanted to follow on the mutual fund selling, which you know very well. And if you look at over half the S&P was down, those names in there was down. And so there were so many tax loss, candidates. And again, if you wanted to lock in some gains because things have run up, that was the time to do it. Mega cap tech has been talked to death endlessly. It's not exactly undiscovered, but the fact is they have incredible visibility of earnings growth. And, and depending on the name, there's the AI phenomena is real. It is not a 1 or 2 quarter thing. You look at NVIDIA, for instance, NVIDIA was up today. I don't know where it closed, but, it got to almost 500 after it reported those 2 incredible quarters of just, doubling their sales and projections going forward. Like even the China they may not be able to ship to China, some types of their chips in the short term. And the medium term, so what? They've got so much demand they can't meet it. But that stock has come off from 500 to almost to 400.
Yeah.
And I'm sorry, their growth rate, or you look at the PE got down to like a 32 times when it was 50 times before they reported these blockbuster earnings. So those are the kind of things that you can just wait, and even if you own it already, which I do, it's a core position in all my portfolios, you just wait out the volatility. But if you don't own it, you can buy it now.
Yeah, I would say, for instance, so we have an AI, 2025 portfolio, we call it, which are the picks and shovels, right? So one of the ones that we just did ridiculously well on because we were ridiculously lucky to own it was SMCI. SMCI is like the Peterbilt truck of the data centers, right? So they're the biggest buyer of NVIDIA chips. It was down at $160, and when we started buying it, and I think a lot of people. I'm very hooked into the AI world. And when I saw the demonstration of ChatGPT in November, it blew me away. And then you sort of like go down the scale and figure out, well, who wins? It was NVIDIA, it was SMCI, it was many other semiconductors, but certainly
Broadcom.
Qualcomm and Arista Networks, ANET, we just announced today. That's our 3rd largest position. NVIDIA is our 2nd. You can't but you can't chase. And that's the thing you learn for doing, and I've learned as long as doing this, is that when the FOMO thing hits and we get a mania like we got with the NVIDIA numbers, then you just saw all these we track these small orders and the large orders. And starting about June 15th, all the orders, there were more small orders than there were big orders. And that means the FOMO, dude, I got to buy this. Yeah. And we got to crush them. I'm in a mood today, Todd, but you got to crush these people so that they'll understand, so that now you can buy NVIDIA at $400. That, SMCI went to 450. We bought it at 150. I made all our subscribers and I told all of our investors, we are selling this. You know why? Because if you make $250 on a stock in 3 months, if you don't take that profit, you are the stupidest human being on the planet, and I'm not going to allow you to do that. But the froth has come down, and now we're seeing these orders of magnitude improvements, and it just at home, don't chase. And if something takes out that way, the stock market has returned, depending on how you do the math, 7 or 9% a year, right, since 59. If you get 50 years of gains in one position in 3 months,
Yeah.
You must
Yeah,
sell.
you have to take some profits.
you
You
have to take
absolutely do. Yeah, no question.
Yeah,
know,
Because
definitely.
then otherwise, then you're a sad sack, remorseful. Oh, come, I didn't sell it. It all came back. Well,
Yeah.
you know what? If you're going to be your do-it-yourself investor, you got to do it yourself, brother and
Well,
sister.
well, you are right. You are right about this quarter actually going back. It's actually historically the best quarter in a pre-election year. If you're going to be long, this is the time to do it. Barb, what do you think? I mean, you brought up consumer spending. I mean, is the retail sector something to focus on? I mean, oil and gas. I mean, oil
She's
has
a
done
tech
well.
girl. Todd,
And
No,
then
and
I mean,
consumer discretionary. I'm
consumer
growth. I'm not big on cyclical because you really got to get the timing right.
Yeah.
It's only when things
Okay.
are maybe so oversold. Like right now, if you look at where, utilities are crushed. They're a 2-year low.
right?
Or real estate 2-year low.
Mhm.
It's things like that we can go, okay, well, that's where, all right, what's the risk reward? Maybe you have to wait a while because those things obviously only do well at certain points in the cycle. But, and real estate, obviously you have to do it by sector,
Yeah.
office,
Yeah.
buildings, we'll see,
Yeah.
But
Okay.
no, consumer discretion. I, love Costco, Walmart. Those are core holdings. Walmart has really, it's stopped being a while ago a sleepy old retailer.
Yeah.
It's number one in the world in terms of sales.
Yeah.
And got, the omni-channel, they continue to have all these growth initiatives and they're just killing it. And that's one you just buy and hold.
Yeah.
So, and the same with Costco, and they have their little dips and ups and downs and they're not invulnerable to macro forces, but they're pretty recession resistant.
Yeah, well, let me tell you, I was in Costco on Sunday, and I didn't see many broken down cars in that parking lot. Okay, and
I love
saw
Costco.
older couples walking out with 2 carts full of stuff. Like they're feeding a family of 100. No, I'm with you. I'm with you on that. That growth to me is a little slower than I like. I'll tell you one though. The GLP-1 inhibitors just all of a sudden crushed any of the technology companies that deal with insulin resistance but Dexcom, we just bought this I guess Monday. What day is
That
today,
got
Todd?
killed recently
It got
because of the
crushed.
obesity drugs. And I discussed it with a friend who owns it, and I thought the risk reward was amazing. What was the downside?
Absolutely.
And this
Have her on
obesity
again,
is
Todd.
we're
Have her on
intermediate.
again. She agreed
She's
with me.
genius. She's brilliant.
No, but I mean, look at Dexcom again. I'm just a slave to freaking mathematics. They get reimbursed by Medicare, Medicaid, by Medicare Advantage, etc. You go to your doctor, you have a high A1C, boom, they pay for it. They pay for everything. You know why? Because if you're on the Dexcom and you get an alert on your phone saying, hey, dude, maybe you want to not eat the 25 pieces of candy you just did because your A1C is now enough to kill a freaking elephant. It changes their behavior and all their risk patterns go down. The thing pays for itself. So when it went down almost 35%, like in 3 days, because everybody in the United States is going to be who's either type 1 or type 2 diabetes is going to be on vitamin O, Ozempic. Come on, man.
Yeah.
I love like bizarre anomalies, Barb, that happen.
No, exactly. And you just have to be waiting there like a vulture because you do get these dislocations. It's ultimately an efficient market, but there's many inefficiencies along the way.
Ooh,
I'm curious, Tobin,
you should write that down.
I'm wondering if you've looked at Starbucks, which reports tomorrow morning. That to me is, I own it. It hasn't done well in the last 6 months or so, but I think they are really doing a lot of good things in terms of product innovation, making them, ordering ahead of time. I don't know you, but I do not like to wait 10 minutes to get a cup of coffee made. And also they're a big China play. And China is an affordable luxury.
Yeah. My fear in that was that remember they were trying to have 560 something stores, and they were opening like 4 stores a week type thing to get there. And when I was in China recently, you could see there was so many vacant stores in these overbuilt shopping centers that nobody's going to, et cetera, that if I just felt like the growth story was getting gutted by that. And the fact that, remember, in China, the way to wealth for the last 25 years, because I'm not going to lose my point about the world has changed, Todd. The way to wealth over the 25 years is you and your wife get together, you buy a condominium for cash, 78 or 79% of condominiums, apartments in China are paid for in cash. Nobody has a mortgage. People have the mortgages as the developers, right? So the government, gave you free money, et cetera. Everybody got these places. Things are great. And then all of a sudden, the world changed. And now, I'm going to be in China in like 3 weeks. It's going to, just to look at the horror show. So their economy was based totally on buying all this steel and cement and building these, every apartment. If you get lost and you're drunk coming home pie from a drinking night, good luck finding your apartment building among the other 25 that are exactly identical.
Yeah.
So I'm not as big on Starbucks. I will say though, at Costco, I just picked up the egg bites from Starbucks.
The egg white bites.
You could buy the Starbucks egg bites at Costco.
Do you think they're good?
I love them.
They're good at Starbucks.
Barbara, have you ever had the egg bites at
No,
Starbucks?
what are they?
Yeah.
Is it
It's
egg
a little-
bites, egg whites,
it's-
egg bites?
They
It's egg
have like
bites.
roasted red peppers in them. They actually are
Yeah,
very
they're
good.
like
Is
little-
it like a
little
deviled egg? I love deviled
No,
egg.
it's like
No,
it's
no.
like it's like a egg that was mixed up, and then you put it in a microwave, and now it grows up, and it's like this big. And
It's-
they have
Wow.
pepperoni
Very
and
delicious.
bacon. Oh,
Yeah. I don't know if I would go to Costco and buy 1,000 of them though, but that's Toby. It's that's what
no,
he
no,
likes.
that's not how I roll.
Yeah.
But I'll just say that I have $126 of points at Starbucks. Okay,
Excellent.
I
Excellent.
can make the entire year, and I'm never going to pay for a drink. Of course, it costs $1,500 to get that, but still. But here's my point, Barb.
Yeah.
What I'm trying to get is I think because of the last 40 years, particularly the last 20 years, and let's not forget that maybe $7 trillion of cash money, monetary stimulus went into the United States monetary system, and it hasn't been taken out. I mean, that's the other big thing that I think people are missing is that, well, where the hell did it go? Dude, it went to the banks who then lent it out or lent it to
Wow.
businesses.
Yeah, and
It's still there.
and it's 6.5 trillion sitting in money market funds,
Money
earning
market.
5+%, which is actually, depending how things evolve, that's a lot of fuel to put into stocks when the moment comes. I mean,
No,
that
you're
is
absolutely
huge.
right. So I guess
Yeah.
just a quick point,
Yeah.
Todd, I'll end it though. But my theory is that if a person is investing the same way that worked like clockwork for 40 years, 30 years, and certainly the last 12 years, then they're crazy because they're making the assumption that all of those stimulative factors, macroeconomic, China coming into the market, 1.2 billion Indians coming, all that is happened already.
Yeah.
And because of deglobalization, that your return on your portfolio is not going to be 95% no dividend stocks and 5% a stock that pays a dividend, but you don't care. My feeling is that dividends are going to come back and be that 30%, 35% return. And there's some incredible high-paying dividends that we have. Again, like like shippers, like LPG shippers, like some of these uranium royalty trusts, except that we're getting 20-25% dividends. The stocks are going up in value. They don't go down when they pay a dividend. I mean, I've never
Amazing.
seen that.
Well,
I've never seen it before. Like
Yeah,
that.
Tobin, I think, if you've got a stock that also has capital appreciation, I had a client, ask me, well, what about buying whatever? And I looked at the growth rate in this company. I looked where it was this year to date. I said, well, if you had bought this January 1, okay, you might have gotten 5% in dividends, but you'd be overall down 20%. So you cannot just look at dividends. And people just think, oh, I want income. But meanwhile, if your whole portfolio is losing value. So it's a good point, but you really it's like the dividend aristocrats. It's really where the companies that have high dividends, but are also growing, because you don't want to lose money by just buying the stock. So
well, again, the weirdest thing I've ever seen, in the playbook, right back in the old playbook. Okay, let me see. Interest rates are being raised by the Fed. So, and we're looking towards a recession. So let's go to the safety trade. Let's buy utilities.
Yeah.
I have never seen 2 years where freaking Florida Light and Power is down 48%. And that was the safe
Power
money.
Light.
And if a financial advisor didn't tell them to get the F out of that because the world had changed, then that person, fire them. Because that is just, that's inconceivable.
Okay.
2-year lows in the utility sector right now. And people think of utilities so safe. So no, I agree. Although, it'll be interesting to see, once the inflation, I do believe, will come down. I think it's going to just continue to serve like air coming slowly out of a tire. It will come down. And when it does, because you look at, remember, it was like over 10 years, the Fed could not reach a 2% target, and there was, the agreement.
Well, in a world of disinflation.
Well, it was disinflation, was a lot of it was technology, productivity. It was globalization, which, by the way, I don't think globalization is over. I mean, we're onshoring stuff, but it's really on the margin. There's still a lot of companies. I mean, you still have to report good earnings to your shareholders. So it's just where they can, they're switching countries, but it's a process. Look at Apple. I mean, they are so invested in China, and so I think that's, globalization, I think, is still very much alive, but over time, being more aware of the geopolitical risks, and also what happened in COVID, where you couldn't get supplies, for certain things, some pharmaceuticals. So I think, yes, Tobin, over time, but I think it's going to take a long time. And so I think once we've sorted out post-pandemic, there's no reason why, like particularly with AI, it should mean a lot more productivity and getting back to that. So, we'll see. We could return to that environment, but for now, we're not. And it looks like another year.
By the way,
maybe 2 years.
Yeah, we own 2 Mexican logistics companies that are ridiculous, 9% dividend, but because of the dollar, they're because Mexican dollars, peso is the only thing that's going down in value faster than the United States dollar is going up. And I totally with you. I mean, Mexico in the maquiladoras and the whole. I mean, you could go down to the border one day and see if the 1,000, 2,000 trucks, I think it's 5,000 trucks a day that go through there. They are cutting the costs, and you're going to see more of that. And then logistics. I didn't realize that logistics in the United States is 9% of our GDP. In Europe, it's almost 11% of GDP. In Mexico, logistics is like 18% of their GDP, and it's mostly going out, not coming in.
Yeah, no, and it's an interesting point about, using Mexico or more South American, Latin American countries, because it solves a lot of issues. One, they're friendlier countries. 2, we help them, and get more jobs so they stop coming, here for a better life. I mean, you look at our immigration patterns over time. We had the Irish and the great, potato famine.
Sure, the Garter we did.
Other than Chinese coming, but they don't need to come anymore because their own countries, are more or less thriving. They're, modern economies.
Yeah. All right. Well, I didn't get out of what I wanted to hear from her, Todd.
Wow, she said it all.
We're living in a new era of investing. But listen, I've written 3 books on growth investing, so I'm pretty much a growth investor.
Yeah.
But I will tell you that, to get BW LPG, the Panama Canal, the water is low. It's low because it doesn't rain in Panama anymore. And, shockingly, they don't use seawater. They use fresh water. So now they have to make a 2,000 extra mile trip. The rates on LPG tankers have gone from $35,000 per day to $95,000 as of yesterday per day. And they're going 2,000 more miles.
Yeah.
And in the old days, Barb, the ship, all the ship guys were all old guys. And every time they got a little money jingling in their pocket, they went and bought more boats. That was just because they went to the Greek ship owners club and say, look at me, I have 55 more boats, right? So they always screwed themselves. Now the sons and daughters are in charge of those companies, and they're saying dividends, buy, opportunistically, but mostly, so I'm telling you, man, LPG.
Well, and you're seeing a lot in the oil and gas companies, in the US who just, they were always doing these projects. None of them were profitable. And finally, the last few years, they said, look, we got to do a better job for our shareholders and returning more capital.
Drill, baby, drill is now pay dividends and buy stock back, baby.
May or may not be good for.
There you go. That was awesome. Well, listen, I think we said it all today, guys. The only thing we didn't cover was the jobs report. But we'll get into that another time.
We know the jobs report is going to be fine for crying out loud.
189,000 is the consensus. Likely will beat. I think there was only one time in the last 2 years that we actually disappointed. So we should be, especially after 336,000 last month. So.
I don't
2 jobs for every one
job.
person wanting to work. 2 jobs for every one. What? It's going to go down? Come on, Todd.
Yeah.
It's slowly, the balance is slowly coming in.
Coming to balance.
That's the thing. It's ideal. It's slowly. It's not going to be this sudden cliff. But we keep an eye on those initial jobless claims, and we're looking
Yeah.
for any signs of trouble there. And so far, no canary in the coal mine.
Nothing there. Nothing there.
I'm with
We
you.
will see that report tomorrow at 8:30 New York time, 8:30 a.m. So you definitely want to check out your local news for that.
It's 5:30 for me, Todd. So just send me a text, would you?
You got it. I'll wake you up. You got it. You got it. So, Barbara Doran, you are the CEO and CIO of BD8 Capital Partners. We invite the audience to go to BD8Cap.com. We'll also have a link in the description of the show for you to go directly to it. Definitely want to see what Barbara has to say there. So, Barbara, thank you so much for joining us today. I can't thank you enough. We would love to have you back on sometime in the near future.
Tobin, thank you very much. It was a great pleasure.
Great.
Absolutely.
Awesome.
Absolutely. So on behalf of Barbara Doran and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us today on Buy, Hold, Sell. We'll catch you next time. Take care.
Buy, Hold, Sell, brought to you by Crosscheck Management.
I want you to smash that like button.